Good morning, everybody. Welcome to the Flow Show, Wednesday, the 8th of January. And a bit of a fairly quiet morning this morning so far. Not too much going on. Markets looking a little bit listless. Some markets coming off of highs from yesterday. We'll get into the prices and that shortly. We'll get through some of the news headlines first. PBOC still fixing the 718, so they jacked it up by around 12 pips to 718.87. There's a bit of flow news from China. It seems that a lot of money is still trying to get out of China because 5 global bond funds in what's called the Mainland Hong Kong Mutual Recognition of Funds scheme, the MRF, has had to suspend new subscriptions because mainland inflows had neared limits. This was a scheme that's been running, and China increased the allocation of how much can be invested by Chinese citizens, I think from 50% to 80% or something like that. But it's seeing a lot of these inflows now going into these global funds, i.e. taking money away from China, put it in to foreign assets via these vehicles. Outflows from China is something that authorities have stamped upon previously, even going so far as capital controls. And with the economy not looking too good, it's one thing China's authorities will not want to pick up again. But anyway, those are nearing their limits, and then the shutters will come down, stopping money leaving China. Over in Japan, there's a chip maker, Renesas, apparently going to cut some jobs, but more importantly, they're going to freeze pay increases, and those were pay increases that were scheduled to come in this spring when they do their pay round. So they'll be freezing pay increases this spring, which is not good news for the government or the Bank of Japan. They don't want to be hearing things like that, although it may be a one-off situation just for this firm, a chip firm that's struggling obviously with autos and the like. So keep an eye on that one as to whether other firms also join the pay freeze, because that won't be good news for Japan. Over in Australia, let's get through some data. Bit of a turn for the Aussie dollar and inflation over there. First of all, this weighted mean, this is the November number, the monthly, went up 2 pips to 2.3% from 2.1%. However, the core, or the CPI trimmed mean as they call it, dropped to 3.2% from 3.5% previously. So that got a few in the market just talking up the slight possibility of maybe earlier rate cuts from the RBA. But CPI going up as a bit of a counter to that core number coming down. More inflation data over in Sweden and some softish looking numbers. CPI coming in flat month on month instead of up 0.2. Year on year number 0.8 versus 1% expected, and down, halving from the 1.6% in the last month. They've got their own other measures as well, this CPIF, which also came in lower year on year, and their core number, or ex-energy number, also dropping to 2.1% from 2.4% previously. So softer numbers there for Sweden as well. So that will be playing into the Riksbank's thoughts for monetary policy coming into this year. More good news for Germany and their data. They made a mess of their CPI report earlier in the week when they posted a rise of 2.9. That got corrected to 2.8%. That was the main German number, 2.8%. So that came down a pip. Great data today as well. Factory orders down 5.4%. It was only expected to fall 0.3%, came in down 5.4%. Retail sales for November, again, big retail month with all the Black Friday bits and bobs going on, was expected to rise 0.5%, came in down 0.6%. Year on year beat expectations, but really the damage is in these other two numbers. So still looking particularly shitty over there in Germany. Over in the Eurozone, we had some inflation data. Well, we had the consumer sentiment, business sentiment survey data coming out. But the key points from that was inflation expectations. These are for December, whereas our ECB survey we got yesterday was for November. So consumer expectations for inflation rising to 21 from 17.8. Firms' selling price expectations also rising to 7.6%. So it's all going in the mix. We're seeing inflation creeping higher. We're seeing expectations creeping higher. And this will be something the ECB will want to combat. Does it mean they're going to stop cutting? Likely not. But if this inflation blip doesn't correct itself lower, then they will be potentially going towards a pause and getting a bit hot under the collar. So be prepared to note that as we go to the next ECB meeting, things are looking a bit sticky on the price front. PPI as well, month on month, just coming in a pip above expectations. Year on year, not falling as much as expected. So that's going to add to the stickiness there as well. Going back to the US data yesterday, and we got the ISM data coming out, which was all pretty good. Headline number coming in at 54.1. So beating expectations, a decent rise on last month. New orders coming in as expected, confirming the rise. Employment, that was as expected, just a pip change there, nothing really to write home about. However, the big news was this big jump in prices paid, 64.4, which was expected to drop from 58.2 to 57.5, but instead it came in very, very hot. Jolts also jumping back above 8 million again. It's looking very positive there. So it's all no landing, whatever you like. Sticky prices, still reasons why the Fed are going to be heading towards a pause. And after all that data, we unpriced a full Fed cut before July. So the market again getting a little bit more hawkish about the Fed, and we're going to expect that to continue for the foreseeable future. We do have some job cutting news. Microsoft is looking at more company-wide cuts as it looks to restructure some of its business. It has been cutting jobs over the last couple of years, but they're set to do another round as well. I think we've got the Challenger Grey layoffs today. Let me just double check. Is it today? We just got ADP. Just ADP today. Challenger will be tomorrow. So we're going to get a look at the jobs numbers today via that ADP, just the first hint of what may be coming from the NFP on Friday. And while we're talking about the NFP on Friday, the competition is open. I'll just pop the link in the chat there. One moment. So if you want to enter the NFP competition, there's the link in the Zoom chat. Get on that, give us your guess. Only guesses in that tweet will count. And we've got a special bonus prize this month as it's New Year. We're offering a free TFP account as well as first prize, part of the first prize for the winners. So 3 lucky people can win prizes. Just follow the blog on that tweet and you'll see the list of prizes, including a free coaching session with a select member of the team, TFP account, access to Forex Analytics, Live Squawk, Peak Suite, the whole shebang. So scaled prizes, but we do have 3 winners. So get your numbers in. I've already made my guess. You have to look on the tweet to see what that is. Right, moving on. Fed's Barkin says businesses exposed to tariff changes must be agile. The Fed remains highly committed to the 2% inflation target. If there are any more price pressures, we will have to be tougher with rates. It says consumer debt is nowhere near the alarming levels of the 2000s. Over in Mexico, Economy Minister Ebrard says reversing the USMCA would be too expensive for Mexico and the US. So a few countries getting their chips on the table regarding Trump turning up in the hot seat. Speaking of the orange one, I had the misfortune of waiting around for his Mar-a-Lago speech yesterday evening, and what a shit show that was. So the whole thing was to announce a 20 billion investment to build new data centers by an investor, big investor from the UAE. So that was all announced. And then he did what he often does. He has a speech and he then goes on his own wander round and about that speech. He'll start on a subject and then just go wandering off to somewhere else. And he did that. So first of all, the most pertinent comment said was that interest rates are still far too high. Then he went on to say something will have to be done with trade with Canada and Mexico. Then he said they will need to change the name of the Gulf of Mexico to the Gulf of America. He says Panama, Greenland, and potentially Canada need to fall under the US for economic security. So he was talking about the Panama Canal at one point, saying that will have to come under American hands. He said he might want to buy Greenland, and if they won't accept being bought out, he was potentially going to invade it and take it for themselves. It was a real bonkers speech yesterday. He went waffling on about whales. He's going to save the whales. He's going to stop all wars. He's going to ban windmills and save gas stoves. It was a real ramble, if you didn't hear it. One other line that he mentioned was about Israel and the hostage situation, saying that if hostages are not back by the time he's in office, all hell will break out. So he's teeing everything up. And if you were wondering whether he was going to be a more composed Trump than last time, based on that speech yesterday, the answer is no. And it's going to be a wild ride. I can tell you that moving forward. And it's all going to start, well, probably start before 20th of January, but it will officially start the 20th of January. So we're all looking forward to that. Right, that's the end of the main news that's going on. We did have a 10-year auction yesterday, and that passed by, US auction, and that passed by pretty much without a fuss. So nothing of note there. But apart from that, all said and done in the news wise and on the headline. So we'll get straight into the prices. As usual, if there's something you're looking at that you want me to talk about, let me know in the Zoom chat. But let me know what you're looking at as well. You know, don't just chuck up a pair and have a look at that. So, you know, if you're chucking up a pair, let me know what you're thinking about it, just so I can tailor my analysis to what you want to know. But let's have a look. We'll start with Aussie dollar, seeing as we've got that inflation data. That was the catalyst for a little move down when it came out. Wasn't a big move. A lot of pairs looking the same way at the moment. We've all had some failures at trying to take out resistance points. I was noting this week, this zone from here, 62, 70, 63s. We couldn't get through. Times we could get through, we couldn't hold it. And here we are having a move back lower. So can't rule out a test down towards these lows again. And just for this one, as I've been mentioning, this one is a bit of a trapdoor low. If we get under there, then there's some empty space pretty much down to the 60 figure. That'll be the next level to keep an eye on. So I've been saying that none of these pairs look like changing the trend. So if you want to be long, pick your places. No good trying to be long up here. You need to sit and have some patience. If you want to be long, this is maybe where you want to play it. If you want to signal that buyers are going to be coming in ahead of this level, just keep an eye on that low there. 62, 61, 95. If you find support coming in there, that's going to suggest that buyers off of this low, that's where they're parking the bus. We've already seen a little bit of action there. So if you're looking for the long side, then that's the sort of area that you may want to consider. But given that we've not looked like breaking this trend in any way, shape or form all the way through, suggests that you need to be careful if you're going long, particularly if you don't bust up above some of these levels. Euro dollar was another one. couldn't get up to that 104.40, had a couple of attempts, and here we are sliding all the way down. Couldn't hold the 104, couldn't hold the zone. So we're going to be down, and we'll see how these levels, intermediate levels, show up. Again, these are more long-term. These two in here, 57s and 77s, they go way back when. I won't... shall I show it quickly? If we can see it, it might be a bit of a mess, but let's see if I can do it on that one, if it's clearer. No, it's not. Oh, let's see. Can I show it? Oh, so it goes all the way back there and all the way back through these areas here. Okay, so that's why I've got that area on my chart in particular, these two levels down here. So if we're going to move down there, we'll see how they fare. Didn't do much on the way down when we came down over New Year's, but it did just show up a little bit on the way back up. So take that noise out. I'll be looking to see how those levels hold up. Again, it may be where buyers off of this low start parking the bus. And if you get any sort of bounce on there, you're looking to go long, then that's where you may get a response and maybe we get back up towards 104s. But again, the trend is not looking like changing anytime soon, all the way from the 112s. And I don't really expect it to change anytime soon either. I'm not going to bother looking at euro sterling because it's doing nout. Dollar yen still trying to make a hold above 158, 157.90. It's looking like it's having a go today. So we're back in these 158s. We're just holding above this area, this line here. So we're looking to potentially build now around this 158, keep it above, and then we're heading up. From here, it's still all about really the high levels. Yeah, you can pick up some other bits and pieces highs off of some of these levels. But for me, it's all about that 160 level. That's going to be the big one. And then obviously that big high up there where the last time we got some intervention. Now, just because we got intervention up there last time doesn't mean we're going to get it this time. Though we know Japanese officials are keeping an eye on it. Okay, it all depends as usual on the speed of things. Okay, if we crawl up there over a couple of weeks, then they may be less inclined to intervene. It all depends on how their buttons are getting pushed at the moment. If we get a fast move up there, you know, as we know, the rule of thumb is 200-300 pips a day, a session. If we're going up there that fast, then the intervention risk is going to grow. I'm still a little bit long. I'm happy to sit here. Now we're seeing 158 starting to hold. I might just bring my stops up from that 157 level, just up a bit, just cover some of this move. So if it does pull back, then I'll just lock in some more profit. But it's still looking bullish as well for this one. So I would not be surprised if we see it creeping higher. Of course, if you're looking at that, you've got to keep your eyes on the old yields. And they're holding their breaks. This was the area coming into the end of the year, into the new year in 10s, 464. We've pushed above. We're holding that break for the moment. We've run up against the next level, sort of 470, 71. Not a huge level, just one of these where you've got some former highs as far as yield goes. That would obviously be lows in the actual price, which you can see here. So that's the price moves anyway. So the 108 figure is pretty much coinciding with the sort of 469, 470 area. So that's why we'll be running into trouble there. But that's the next main level. While these yields are holding up, and I've been saying it all week, you're not going to see the dollar correcting lower too much. Okay, yeah, of course the dollar can move around while yields stay put. But unless we see a big sharp move down in yields, then the dollar is going to recover likely from any dips. Obviously, tomorrow we've got the day of mourning for President Carter, so it's going to be stocks are closed, half day for bonds. So it's going to be a light trading day tomorrow, and then we slam back in with the NFP on Friday. So that's when you might get some moves in the dollar that maybe don't go with what happens in yields. But we'll have a look at that. Oh, morning, Ali. You just decided to come back for the new year, mate. You missed half the week. What are you doing today? Short cable. Yeah, you've probably got a decent one there, mate. We had this break of 125. Yesterday, it was looking like we were trying to hold it. We opened up above it, but it gave out yesterday. We're back below. We're messing around this 124.50 area. On the first move down this morning, we went straight through it, but it hasn't gone too far just of yet, but it's not looking strong either. So I wouldn't be inclined to lean against this for longs. But if we are starting to hold below it, let's have a look at the shorter term, which we are, then we're probably heading lower. I think 124, 124.10 is going to be the next level to watch. Again, if buyers are going to be protecting the New Year's low down here, that's the sort of area I'll be looking at, maybe down to sort of 123.85, just around those levels there, which is where we saw support coming in after that. So same picture as we've seen in the others, Aussie dollar, euro dollar, a lot of dollar pairs. We've had a move up. We can't hold it. We couldn't get up to test a decent level, 126, 126.10. So down we go. And that's a question of how far down do we go for that one. So nice grab, Ali. You short that one. I want to see you riding that one, mate. We're holding below this 124.50. So if you haven't taken any profit already, you might want to think about it. Let's have a look. 24.08 is your profit target. Yeah, it looks fairly sensible. But if you haven't taken any profit thus far, you just might want to think about that, mate. Take a little bit. You can always, if we're going to move down towards that 24.20 area, you can maybe just bring your stop down just above that 50 area, 50.60 maybe, just to protect the rest, lock in the rest of the profit, and then sit on it, see where it goes. Take a bit more off 24.08. Again, lock in your stop and see if it does get a move down there, mate. Hopefully, if it's your first trade of the year, you make it nice and profitable for you. Mike, if the NFP comes in line Friday, do I believe it would be enough for the dollar to keep going up against G10 currencies? Yes, I do. The market is really only going to get a shock, i.e. a negative dollar reaction, if it's a really bad number. Anywhere positive at the moment, anywhere around expectations. Let's have a quick look. I can't remember what expectations are for Friday. I think it's around 100 and something K. Let's have a look. 120K, is it? Let me find out. What we're looking at, 154K. So that's what's expected. So anywhere around that, even if it's an 80, 90, it's still a positive number. That might look a little weak. I don't think it will destroy the dollar. Anything weaker than that, obviously, the dollar's going to see a bit of a reaction, but whether that lasts is another question. The market is thinking the Fed's on pause, so it's going to take more than one wonky number. Obviously, if we get a negative NFP, something shocking like that, then you're going to see a bigger reaction. But if it's a positive number around there, then everything should be okay, even if it's in line, because it will still continue the role of decent jobs growth. Probably more importantly, keep an eye on the unemployment rate as well. Obviously, match that off about with the participation rate too. Where is the participation rate? Can't find it. There we go, 62.5, because that can obviously impact it. But we'll talk a lot more about this on Friday. But yeah, I don't. It'll be enough to keep the dollar supportive, Mike. Whether it continues riding higher, I think you have to keep an eye on yields. We might just. I can't see yields ballooning higher, although it looks like they are. There's going to become a limit, and I know a couple of people in our chat room have said the same as well. There's going to become a point where it's just too far is too much for yields. I mean, it's not as if interest rates are going back to 5.5% or whatever, and it's not really being reflected in the short end either. 1 year yields 4.19, 2-year yields 4.29. So at the short end, it's not reflecting that rates are going to be higher. In the long end, rates are looking more sticky, but it's going to get to levels and we've seen it before. We saw it last year when we had this move up in the middle of last year. You know, I was saying at the time, market gets up there, it's going to be too enticing for investors. Okay, they're going to think, well, the Fed's still cutting, and here we are with yields up at 4.72. And when you get in NAFL in places like Japan, you know, you're going to get investment coming into that. And I think we're in a similar situation here. Can we creep up to 5%? It's possible. I think it'll be a tough ask. So for the dollar to do more from this point, for yields to do more from this point, the US economy has really got to excel. It may happen if we get a 250, 300k jobs number, unemployment at 4%, something like that. Yeah, you're probably going to get another leg up in the dollar. And that'll all be just on the market changing those Fed expectations. And the old pendulum will swing again. A couple of reports like that, and we probably will be talking hikes again, or the market will be anyway. Right, what else is going on? Let's have a look around. Let's look at gold. Similar picture yesterday. We had a little run up towards the 60s level. Again, just couldn't take out that high from Friday. You know, got up a couple of pence short of that one, and then we've come down again. But it's not going too far. So this one is still very much in a period of consolidation. So no real direction yet for that. Don't mess around in the middle. Look to trade the edges for now, or the breaks of those edges as well. Where else? I'm going to have a look at dollar China, because I've got my buy stops in now, because we're not straying too far for these highs. I'm still short up here, not too far from current price as well. I'm glad I got some slices off anyway in that move down, but I'm starting to protect now with flipping my stop from on the shorts to longs if it breaks up there, because we've had this, it's pretty strong triple top so far, and the fact we're not straying too far of it suggests we if we do get a break, it might have some legs. The only counter to that side of things going long is that we know that the officials, PBOC, are trying to keep a lid on the currency. They're not quite the same as the MOF in Japan, you know, in terms of spanking it for knocking it down 300-400 pips. They can do it, but that's not their usual MO. They'll send their banks in just to sell some dollars, just to firm it up. As we know, they're also messing around with overnight rates, making it more expensive to be short the currency. So they've got things in place to stop things moving down, or stop things weakening further. But they don't tend to smash it with a hammer like the Ministry of Finance do on the intervention front. So it is a risk, but technically, if we do break up here, then I'm going to be potentially flipping to longs and see where it goes from there. Dollar CAD, Durridge, my old mucker. A bit of a recovery in that one, if you can call it that. Back above this 143.40 area. This was the range I was looking at earlier in the week. We had that break below, looked like it was trying to hold. Now we're back above and we're holding it. So potentially we're back now in this range. It keeps another move up to these highs in play. So it's got every chance of having another run up there. What will be the driver of it? That's the question. That's the question indeed. If we look at oil markets at the moment, just to see if there's any play going on there, that move might be related to this little dip back in oil, but it's not a massive move in oil markets. But that just could be, for want of anything else to do, that could just be helping dollar CAD or CAD weaken a tiny bit, getting that back up into that area. So just keep an eye on this. It continues to hold us 8. We might get another move up there. If we get a quick move up there, be careful, the risk of a break. And if we get a break, then off we go again. Probably going to have a look at 145 from that point onwards. On the wider picture, though, it's really all about this massive double top up here. Let's get it on the old clearer chart for you. Where are we? There we go. So it's all about these levels up here, just shy of 147. Okay, that's been my thing since we broke 140s, 142s. It's been, can we test up here? That's going to be a real interesting test if we get up there. Break that, we go into 150. If we hold it though, that is going to be one hell of a possible triple top. So it's a big old level. I might give it a little go depending on what's the driver if we get up there, because I think at least it might be worth a trade on a first hit, because you know, huge levels, huge level, years apart. So it's always worth having a little tinker at levels like that. Ali, you think gold's going to go up if the NFP is weak? It's possible. The only thing I'd say about gold in terms of what's going on with everything else, it's just not doing much. You know, we've had a big old trend going on. We've had a lot of buying, China buying, everyone buying in this rally, but now we're just seeing this consolidation again. So I don't know what's going to get it moving again. Is it going to be the data, or is the market already long enough? Again, Trump risk. Don't know how that's all going to turn out. Maybe we're seeing that happening in gold as well. You know, stocks are getting a little bit wobbly as well. You know, 1 minute we're looking to get back up towards the highs, and then the rug gets pulled out again. So it's a similar pattern here in stocks as we're seeing in gold. It's basically an indecision pattern. You know, we have lows, we bounce back, we come down, we go up. We're probably forming a bit of a wedge, but that to me is just an indecision pattern. It's a market that says we're not quite ready to sell off, and we're not quite ready to go and steam in with buyers again. And I think a lot of that is, unfortunately, just waiting to see what happens with Trump. So we're 12 days away from that. We are getting comments out of him, but until he actually gets in and we actually see what policies are going to be put in black and white, shall we say, and when they're going to come, the market's going to have a little bit more of that indecision coming through time after time. Do I remember Mark Carney? Of course I remember Mark Carney. And yes, he's going for, potentially might be going to become PM of Canada, which would be a big laugh if that happens. Good luck to him. I don't care what he does. Personally, that's my view on him anyway. Right, anything else for anything else, boys and girls? I'm just trying to see what else I'm looking at, really. My Aussie Kiwi, I'm still short that from last year. I was looking at this one early in the room. Still in this price action pattern, higher highs, higher lows. So it's still looking pretty bullish on the short term at the moment. As I spoke about in the chat room, potentially looking bull flag if you like those sort of things, but it's growing, the flag's growing. So if it gets longer than the pole, that'll make it the pattern redundant. But for me, it's really all about the 111. If we're above this 111 area, then we're probably heading a bit higher, maybe up to test those highs again, up in the 111, 70s, 80s. It needs a move back under, firstly, this pivot area, 110.50, but I want it under, personally, for my shorts, 110, 110.20. Back under there, it starts to break down this formation, and then maybe it's heading down there. Otherwise, it's a bit sort of neutral in this area. I'm still waiting to see if the RBA is forced into quicker cuts. Now we're heading into 2025, but obviously I've got to keep an eye on the RBNZ as well in case things soften there and they pick up their cuts as well. So I'm happy with the trade still. I'm still in profit. My average is a bit better after doing some slicing and dicing, but yeah, I'd like to see it back under 110, and then it might be going back towards the magnet, but long way to see about that. Peter, CAD seems to be strong. CAD yen, not one I look at an awful lot. I don't even know if I still got it on this one. Let's have a look if I've got the old CAD yen on there. Anywhere? No, I haven't. So let me bolt it in there. Let's have a look at that one. See if I've got anything going in there. So we've got this area up here, 110.50s. Bit of an on-off level, not a hugely strong one, but just an area that we've had previous reactions to, going back to the latter part of last year. We're knocking that up there. The trend looks bullish from this point. We've had decent dips. Can it go on to take out these highs? This looks a bit similar to dollar CAD in its makeup. Sitting in a fairly tightish range, but it's happy to be bought up on the dips. From the Japanese side, yeah, keep an eye on that one. But CAD yen's a different beast, I think, to a lot of yen pairs, because there's a lot of influence going on from the commodity side of things and whatnot, and obviously then what's happening in the yen side of things as well. So what are you doing in this one, Peter? It could continue up. Certainly the trend since December keeps going up, so you probably want it back under this sort of area. Let's chuck a line in around there. Why are they going blue again? Right. So yeah, it could continue up. Obviously need to get back above that 110.50 area. Back below 109, 109.5, maybe 109.20s. Things will start to change, but this trend doesn't start changing unless we're under this 108.50-60 area. It's a bit short term for a fib. I don't usually like putting fibs on such short term price action, but give or take, the 38.2 comes in right against that support area. So that is your key level. So you've got a bit of tech confluence building up there. If you're long already, then good luck to you, and I hope it breaks up. If you're not long and want to get long, that would be the sort of area you'd want to look at. You might want to look at that area. You could do just for a little, a small trade, but otherwise down towards 108, 60s, 50s is where you want to be looking for that one. And if we're breaking below that, then maybe this is washing out and we're heading back lower. Right, anything else, boys and girls? Or I'm going to call that a day. Kay, I think he's back on Friday. I'm not sure if he's back on the show on Friday or he's just back in the office sometime Friday, but he'll definitely be on from next Monday. Aside from that, then, have a great day, everybody. Take care, trade well, and I'll see you all tomorrow.